Hey everyone, today is Friday, the 26th of July, 2013, and this is Brian Shannon from alphatrends.net speaking. Hope you all had a good week of trading. Let's take a look at the numbers first. Before we get to the charts, the S&P 500 did lose a little bit of ground this week, and the NASDAQ bounced back. The Russell 2000 down slightly. Semiconductors were really the hardest hit, down another 1% this week, and they've been underperforming a little bit recently. Financials lost a little bit of ground, and some of the other trends that we've seen have remained intact as well. So the S&P 500, let's look at this daily chart. We had a break to all-time highs about a week and a half ago, and that prior resistance really kind of held a support in here. We are still above a 10, 20, and 50-day moving average, and when we look at a 10-minute time frame, you can see we got just back above that 5-day moving average again here at the end of the right at the bell. So for the week, the volume weighted average price was 168.80, and you've really got to be impressed with the resilience of this market and the way that it's been correcting that. As I've been telling subscribers, if you're looking to sell short, you can do it on an intraday basis for day trades as the market is below the volume weighted average price. And here this morning we saw that there was a decent short opportunity midday. It came down precisely to daily S2 and then continued to just ramp higher from there to close pretty close to unchanged for the week. So again, very impressive rally here today. I would expect that next week we might need to settle down a little bit before being able to really continue again. But if we can hold in this area above 169-ish next week and build from there, then I think that this market still has the ability to continue to push higher. The path of least resistance is higher. We saw that a couple weeks ago. We came down to the volume weighted average price year to date, found some support there, and from that level is really where we've been experiencing all this strength. So again, the NASDAQ regained some of its ground. If you recall, last Friday we had gapped lower and finished near the lows that day. So for the last 5 days, though, we had been trading really kind of in this little range. We had a little shakeout during the week, so our key level of support, for the next couple weeks is going to be 74.20 to 74.40. But what we want to see before that is, ideally, I think that if we pull back a little bit and see the 5-day moving average hold as support, so we kind of come up, close this gap, pull back a little bit, create a higher low, and then that would put this market in a better position to continue to move higher. Again, on the monthly time frame, we're really looking strong, and perhaps we're headed north of $80 a share on these on the NASDAQ eventually. The Russell 2000, again, that was down just slightly for the week, down 0.18%, and you can see that it's been a stronger market, and it really holds up well. If we take a look at even a trend line like this, we've been talking about the fact that, yes, the trend lines were broken in some of these markets. Let's go back to the S&P 500. We did break the trend line there, but we don't have a pattern of lower highs and lower lows. We got back above the 5-day moving average, and we've seen a very shallow correction. If you took a look at, just talking about the S&P for a moment again, since those lows we saw in June, here's the range that we've been in, and a 38.2% retracement will get us all the way down to 164.5. You can see that we've really retrace probably about 10% of that. So here's our key level for the S&P 500 next week is below 167 and a quarter-ish. Then there could be issues for this market, but we'll continue to give the benefit of the doubt to the buyers, and as we will in the NASDAQ and in the Russell 2000 as well. Breaking a trend line only means that the rate of ascent has slowed. It doesn't mean that we have a sustainable downtrend, especially when we have key levels of support holding up. And in the Russell 2000, it's really about 103 to 103 and a quarter. This little area, 102.90 to 103 and a quarter, that's the level to focus on next week. If we remain above that, you just can't be bearish about this market. We have buyers still showing up on the bids. There's still demand for stocks, and we are at all-time high, very close to all-time highs in the Russell 2000. I mean, we've only closed above this level maybe 3 or 4 days. The semiconductors, again, they were hit harder again this week. They, last Friday they got hit, and then again this week they have been held captive to this declining 5-day moving average. So that's kept us away from being long the group on a swing trade basis with a declining 5-day moving average, that is. But the daily time frame, we're really kind of just sitting on that 50-day rather moving average. and I think that this market is more neutral than bearish. I think it looks to me just like a pullback down to the 50-day moving average, and perhaps we kind of move back and forth a little bit in here. That is, find a little bit of support and get a bounce. I wouldn't want to be long this market, and I wouldn't want to be short it either. To me, it's just kind of in a void right now while it kind of sorts itself out. Whereas the financials are still in a strong uptrend. If we look at the 30-minute time frame, again, we saw that the trend line was broken, and then we broke the first level of support, which is now acting as resistance as well. So for the financials, we have to be still a little bit more cautious in here. Back below $20.40, then I think we continue to move lower, and perhaps, if that were to happen, we come down to closer to $20 a share. That would likely lead to further selling in the broader market, but for now, we'll just stay focused on the fact that it remains above that key level, and if it can get back above really this little band of resistance right in here, so between 2065 and 2075, if it can get back above that level and hold above it, that gets us back above the 5-day moving average as well, then I think the longs can breathe a little bit easier, and we can look at this and say it was just a pullback within an uptrend. Right now, it's too early to tell if it's just a pullback within an uptrend, so we have to remain cautious until we have more information from the market. I wanted to talk real briefly about the VXX. I still have people, wondering why the VXX was down when the S&P 500 was down, and why we had, why this thing is such a piece of garbage. Well, look at this is split adjusted. These are actually real prices here. It's a decaying asset. What happens with the VXX, the volatility index, is that it bleeds off and they do a 1-for-5 stock split. They've done this numerous times and it's poison. Just don't trade it. Act like this VXX doesn't even exist. It trades volume of, what is this, 3 million shares a day, 38 million shares a day. I don't know who trades this thing, but someone's making a lot of money at the expense of most retail people. It is a decaying asset. Stay away from it. Let's talk about Apple. Apple had earnings this week. And we saw last week that it was pulling back. It was below that declining 5-day moving average. And we were talking about how it broke support. But you couldn't really be short this thing with confidence because of earnings coming out, and that you wanted to really be on the sidelines ahead of that. Well, impressively, what we saw here this week was that the market gapped back up above this key level. And this level is something we were talking about because it was this Fibonacci retracement, that is a 61.8% retracement of this range right here and this prior support. So this little band of prior support, which then became resistance, we gapped up above that and held it. We can see that we're above the rising 5-day moving average. And what I think is most impressive about Apple for this week is that after the earnings came out on Wednesday, what we saw today is the volume weighted average price since the event. The event is the earnings that came out 3 days ago. So we want to say, what's the volume weighted average price of the last 3 days? Is the average participant who's involved in the stock long winning or losing? And the volume weighted average price was about 440. So the buyers held control of this gap higher for the week. Now, it doesn't change the fact that the primary trend is still lower when you look at a weekly time frame. It is, at best case, still undergoing accumulation. There's a couple levels to look at above. We have this trend line that's been in effect since mid-February highs. We've got a couple of hits on that. And then if we look at the volume-weighted average price year to date, actually I have them both drawn in here, the volume-weighted average price to date is at that orange line, which is right around that 447-ish level, and that's approximately where we see that declining trend line. Now, it doesn't mean that will be an obstacle or a barrier for this stock to be able to move higher, but it's important to recognize that that's a potential area of resistance if it gets up towards that level next week. But we're starting to see at least the stock is holding on to some gains, and that if it was to get back below 435, I think that's what we really changed the outlook for Apple going forward. Otherwise, it seems as though maybe it's ready to get a little bit further bounce. We've got the 150-day moving average. So if you recall, the 50-day moving average was resistance for a while, then the 100. Now we have the potential that it's actually the 150-day moving average that has the potential to act as resistance, and that's right around 449 as well. So that will do it for today. I will wrap it up by saying thanks for listening. I have updated some of the frequently asked questions on alphatrends.net, so take a look there. And there's also a webinar that is being sent out via email from a recording I did for the Market Technicians Association. So if you haven't signed up for the free newsletter that I send out, you can go to alphatrends.net and you'll see that obnoxious pop-up button to get this free swing trade report. That free swing trade report will prompt you to enter your email, and then I'm going to send you these videos once a week at the end of each week. That is the Friday video, so you don't have to go looking for it. And I'm going to send a whole bunch of spam as well. Of course, I'm kidding. I don't sell my list. I don't send many out. And anyways, if you're interested in that MTA educational seminar I did on Wednesday, I have a link to the recording that will be going out to all the subscribers for the email. So thanks for tuning in, and I'll talk to you next week.